Hello everyone, I'm Marty and welcome to the October 2021 market update. Gonna jump right into things this morning. One of the metrics that I use to monitor how active the market is, if you've seen my videos before, you'll know is called the sales ratio. And all the sales ratio is the absorption rate of product into the market. And very simply, out of, say, for example, 100 homes that are in the market, if less than 11 of them sell in a given month, we're in a buyer's market. So if that sales ratio is below 11%, it's in a buyer's market. There's downward pressure on pricing. If it's between 12 and 20%, it's a balanced market. And if it's over 21%, we are in what we call a seller's market. So if over 21 of those 100 homes are selling every month, it is a seller's market. There's upward pressure on pricing. Great time to sell in. I'm gonna have a sip of my morning coffee. Great. Nothing like that in the morning. So let's actually see what's happening in Metro Vancouver. Great evening shot there from a unit in Vancouver. So right now we're continuing to see that drought in inventory we saw over the summer. That's keeping inventory low. The demand is constant, and that is continuing to keep that sales ratio in a seller's market. As soon as that changes, we're going to talk about the different factors that are going to influence the market. We've been gliding through summer at a pretty steady pace in pricing, mainly because the inventory has not changed. So overall, we're in that 30% sales ratio for Metro Vancouver. Let's just look what's happened since last year. The total listings year over year are down. No surprise there. The total sales are down compared to year over year comparisons, but the sale price year over year is up in general for all product in Metro Vancouver. Now, let's go to my table that I put together for you guys every month. If we look at the sales activity year over year broken down into different product, for detached houses, we have 28% less sales activity. Big drop in activity. For attached townhomes and duplexes, the activity's dropped 21%. And for apartment condos, only a 2% drop year over year compared to this month last year. Benchmark pricing year over year for detached houses up 20%. Significant increase. Most of that took place this spring. And if we look at attached townhomes and duplexes, up 18%, very close. Condos up 8% year over year benchmark pricing. Now, what's happened over the last month? As I mentioned to you, the inventory has been very, very low. It's been staying low all summer, mainly because people have been away. Hasn't changed much in September. We had the election. Everybody was waiting for that to happen. Now we're in that transitionary phase where things are going to start changing. And you can see month over month, detached houses up 1.2%, pretty well the same. Same with townhomes and half duplexes, and condos up 0.5%. So not a lot of change in pricing. It's been a steady flow through September as it has over the summer. So again, the four main market drivers are: number one, money is cheap. It's beginning to increase, so that is a changing factor. We're going to see changes over the next few months in our mortgage rates, and that will impact our market. We'll talk about that a little bit more later. Savings are up. People do have a pent-up savings that they're using to buy property. That's also changing. A lot of people have started to dip into that with this consumption boom we've been having. Demand for more space, that has not changed since the beginning of the pandemic. One of the main drivers where people are wanting more space, upgrading their product to larger, more spacious. Some are moving out of town to remote properties. So that's been a really interesting factor that nobody actually forecast when the pandemic just started. So the most important one, of course, is the supply. And that's the one that's going to have the most dramatic impact on the market. The supply levels have stabilized. They dropped slightly over summer, as we know. Not a lot of people listed in September yet. That might change very, very quickly. So let's go on to what's hot and what's not. Again, remember our sales ratios: buyer's market under 11%, balanced 12 to 20, and over 21 we're in a seller's market. Detached houses west side, we are at 12%. So we're just into the bottom end of that balanced market. We're at 12%, and that is just at the bottom range of the balanced market, just above a buyer's market. You can see the different neighborhoods, how they're faring. Remember, in our peak sales ratio in spring and in April, we were at 28%, and that has gradually been declining in activity for detached houses west side. Condos, townhomes west side, we're still in a very strong seller's market. Very interestingly enough, 30%. And you can see that's been all over the place, popping up and down from our peak of 46% down to 40, 39, 34, 30, and then back up to 39 last month, and then at 30, depending on how much inventory is trickling into the market. That demand has continued to be there. So that's also interesting. Still in a seller's market, west side, condos and townhomes. If we look at condos and townhomes downtown, very similar, 27%, so still quite an active market throughout all the neighborhoods in the west side. You'll see a change with all these products as you go through the different price categories. The higher in price you go, the sales ratio starts to drop off, less people in that particular product, but overall condos, townhomes downtown, 27%, faring quite well. Detached houses east side doing better than detached houses west side. They're at 30%. Now remember, in April they were at 53%, and that has been gradually declining down to last month of 21%, then a big jump at 30%. Again, this is being governed mainly by inventory. If there's not enough houses to buy and that demand is still there, that's pushing that activity up, and that will push the prices up. So detached houses, strong sales ratio in a seller's market, east side at 30%. Condos and townhomes, east side, we're at 39%. Very hot market for condos, townhomes on the east side of Vancouver. You can see we had a peak in April of 84%, and that has been gradually dropping, but holding strong at that 41% last month and 39% this month for condos, townhomes on the east side. Still very strong seller's market. So what's happening in the burbs? It's really mixed, and it's depending what kind of inventories we're getting in each of these suburbs. But basically, I've changed colors now. I've gone to green circles for the sales ratio popping up. Basically on the west side, Port Moody, east side, Surrey, Port Coquitlam, Pitt Meadows, Mission, and South Surrey. All of those sales ratios have increased, and the sales ratios for detached houses are slightly up as we go into the Lower Mainland, but the main contributing factor for these sales ratios increasing is there's not enough listings, okay? If we look at attached product, we're seeing the same thing. We're seeing a lack of inventory, and that's slightly pushing those sales ratios up. No dramatic increases, but they've been staying quite strong. And that upswing of the ratios across the Lower Mainland for attached product is mainly due to the fall in inventory over the summer. Nobody listed yet in September. So again, that's what's resulting in all of that green. So that's the burbs, very active. Now, what's happening next? What is going to happen next month? Nobody knows. We can only speculate. I have some ideas, but it really depends on a few factors, and let's talk about that. First of all, let's talk about the pandemic and when will this end? Well, very quickly, I show these graphs. Again, I don't claim to be any expert in the pandemic at all, but the pandemic and how it progresses does impact consumer confidence, and that's why I bring it into my presentation. People are being bombarded with this every day, so it's really important you see this data and how it impacts our market. So if we look at, in Canada, Currently, we're seeing that fourth wave peaking out. The hospitalizations as of the end of September, 2,500, 7-day average about 2,420. So that's still increasing right now, the hospitalization rate. Overall in Canada, number of cases also increasing, and the 7-day average about 4,300 cases. So that does not show much sign of tapering off yet. And in the US, they are having a little bit of a different story. They had a very rocky September, but as you can see, the actual case count in the US is dropping. That's kind of good news for us as well, because this could be a forecast of where we're going. They have recently passed that 700,000 death mark, which is very unfortunate. Very sad to see that. Interesting stat with that is over 200,000 of those deaths could have been avoided if they were vaccinated. It was a very interesting stat I read the other day. So in the US, I thought this was kind of a cool shot, just showing where the high concentrations of COVID are in the US. And you can correlate that with the different political parties. It's quite interesting. And if you look at the average daily COVID deaths, sorry, I know this is a bit morbid topic to talk about, but it does impact our market. Look at what's happened with the US. They're at about 0.6 deaths per 100,000 people. And that is really interesting how they're comparing to the rest of the world. The UK is at about 0.2. France is just under 0.2. And for Canada, the 7-day average is 41 deaths per day, and over 38 million people, that's 0.1 per 100,000. So we're actually faring very well. We're way down here. We're actually doing better than Germany, France, UK, and many parts of the world. So good on you, government, for rolling out those vaccines. We're doing quite well compared to the rest of the world. So that is making us more comfortable to get out and purchase and sell real estate here in Vancouver. Vaccine progress, again, we blew past the 70% mark. We're nowhere near where we need to be. We were told we needed to be at 90%. Now that data is starting to change. And now some experts are saying we actually need to be at 95%. So vaccines save lives. Get out there and get vaccinated. We want to avoid a fifth wave. There's my plug. And brace for more pandemic. The unfortunate news is that it will not be over, according to the experts, in the next 6 months. There's billions of people around the world that are not vaccinated yet. And the experts are claiming now the pandemic won't be over until 95% of the global population has been vaccinated or develops natural immunity. And also, it's quite interesting seeing what the National Post wrote a couple days back, the race between the waves of transmission that lead to new variants and the battle to get the global population inoculated won't be over until the coronavirus has basically touched all of us. So either you're vaccinated or you get it, is what they're saying. And again, that's impacting a lot of people's decisions on what to do with respect to real estate. So consumer confidence, you can see the unemployment rate has dropped substantially in BC and also in Canada. We're at 6.2% now. That's pretty good. The employment levels are back up past pre-COVID baseline for middle and upper income owners. And we can also see we're very close for the low wage earners as well. That's been popping up and down depending on what's been happening. But you can see we're getting back to getting full employment pre-COVID levels. That's good news. So we can see that again. The post-pandemic employment again in BC has passed the pre-COVID levels. In Canada, it's almost there. Again, good news. Rental rates, I'm just popping this in out of interest because I found this slide from BCREA, very interesting. You can see as of April how the Vancouver rental rates have really began to shoot up for 1 and 2 bedroom units. It's probably all associated with the cost of real estate going up, the limited ability for landlords to increase rent. That's being restricted to 1.5% as of January 1st. So when a new vacancy comes up, landlords have to charge more to cover a lot of their costs. So that's interesting to note. Consumer price index up. This is really interesting. You can see the consumer price index components. One of the big increases has been in gasoline. 29% increase year over year. So that's been a big jump. Of course, shelter, we're talking about housing and recreation, education, reading. Everything is up year over year from the consumer price index. So things are getting more expensive, some due to COVID supply lines, others due to higher demand and the inventory and supply of these things just not being around. So that's quite interesting to note as well. And consumer confidence is back up for business, way past pre-COVID, and you see the personal consumer confidence, you can see, is having a little dip over the summer. So there's reasons for that, and we'll chat about that as well. The cost of borrowing, here's the extrapolation of where we see the rates go, the baseline inflation, accelerating inflation. We're going to see that increase over the next few years, and that's going to put pressure on, of course, the lending rates, and the mortgage rates will increase accordingly. So when we're seeing inflation rates of 3 and 4% coming out, the government's doing its best to keep the borrowing rates low, but eventually that's going to let go and we're going to see the rates increase. So those rates are going to be on the upward swing. Inventory levels. Now, this, as I mentioned earlier, is the biggest factor controlling our market right now, and it's one of the most temperamental factors that could change and dramatically impact our market. So as you can see, the inventory levels, we're talking about West Side right now, houses, you can see over summer stayed pretty constant. We didn't get enough inventory coming in to meet that demand, and that's kept it still in that balanced market. For condos, townhomes, you saw a drop in inventory over the summer, little increase in September, but that demand has still been high, and that's what's pushed it into a strong seller's market. If we look at the east side, you can see, remember, east side houses were very strong and east side condos, townhomes very strong. You can see that inventory dropped throughout the summer. No major increases in any of these areas for inventory, and of course that's impacting the sales ratio and impacting prices. So as soon as we see a change in inventory, we're going to see a change in pricing. Okay? So again, this is the historical average price graph since the beginning of time, and the beginning of time in Vancouver started in 1977 when we tracked it, where real estate was almost zero value, interestingly enough, compared to the numbers today. But just looking at the detached blue line, here's what's going on. I can't figure out what's going on. It's kind of doing one of these, as we did back in 2016, and then boom. So it's a bit static right now, again, because we're in that transitionary phase. We had a big increase in attached product, as you can see here, and condos have been steadily bumping a little bit higher, but it's quite dramatic to look at that over the whole period of time. And home sales listings and starts, that's really interesting. You can see we had our peak activity, as I mentioned in my previous updates back in April, and the number of sales has been dropping since. Now, the more important line I want you to look at here is that yellowy orange line, where you can see as of April, look at the inventory started to drop. But you can also see that there's a potential for that inventory to jump up very soon. So what about China? My clients are saying, well, isn't there going to be a lot of money coming in from China? Well, maybe, but it doesn't look that promising. If you look at the property prices in Beijing compared to the rest of the world, this is quite interesting. The ratio of property prices to household income, it's way overblown in China. There's lots of talk about their major real estate developers being on the brink of insolvency. They're having energy issues, and there is discussion of this overblown bubble in China ready to burst. So that's one issue. The other issue locally is there's much discussion, and I'll talk about this in a minute, a platform, liberal platform promise, election platform, to ban foreign home buyers for 2 years. So the likelihood now of money coming from Asia is starting to get very low for all of these factors. And just again, talking about that, there's the foreign home buyers ban. They were talking about banning foreign home ownership of Canadian houses over the next 2 years. That will definitely impact that possibility of the Asian money coming in. Another one of the platform promises pre-election was to ban blind bidding. Wow. So that would really impact people's ability to generate the highest sale prices for their home if everybody's exposed to what the other bids are. So that's a very interesting one. We'll see what they do. And these will impact where our market goes. Absolutely. They're going to be major, major factors. So, and this is kind of a cute little graph or graphic. What's my home worth? Well, to you, your home kind of looks like this, which is cool. To the buyer, it's a little bit smaller. To your lender, it's kind of a shack, and your appraiser looks at your home like a tent with a rain cloud in the back, and there's your tax assessor. It's a mansion, and of course, our mansions and our homes are going to be under attack very soon, possibly if a lot of these new legislative changes are going to come into effect. So what does that mean for us in Vancouver to forecast? I've put this little graph together, tabulated all of the housing price index. So that is a very good way to look at how prices have gone in Metro Vancouver. Back here in March of 2020 is our COVID-19 shutdown. You can see how that impacted prices. And then we started to have an increase through last fall. And then it increased dramatically as we predicted up until our peak in April, and then we've had a slight decrease in the housing price index to date. Now, where is it going to go? Let's look at the factors that would influence that. So for doing a forecast, there are various factors that will determine the fall course of our market, and let's look at what those could be. Well, if there's no tax changes, and if the interest rates remained low, and if the pandemic ends and everybody comes out and starts listing and selling and people buy, all these buyers that have been waiting for the pandemic to end, this could result in our market prices continuing to increase. That's the perfect world. However, if the rates do increase a bit, and our inventory remains pretty constant where it is now, we could see the market just continue to mosey along more or less on where it is now as it's done over the summer. However, if we have a change in our capital gains tax, and the government comes out and says, okay, we're increasing the capital gains tax from 50% to 75%, or hopefully not 100%. For all investment properties, we could see a dramatic surge of investors dumping property onto the market. That would be a big factor. If there is indeed a ban on foreign buyers, that will have a negative impact on our market. Absolutely. And if the interest rates do continue to climb as predicted, that will have a negative impact on our market. And if the pandemic continues along, that's really impacting the consumer confidence and people's ability to make these important decisions in real estate. That will certainly impact our market. Consumer confidence could fall, and if all of these things happen, it's highly possible that we'll have a mass listing surge. And of course, the result of all that would be our market taking a drop. So that's my presentation. Nobody can tell the future. It really depends on what our government's going to be doing now. I think everybody's waiting for that. So you will see some announcements, I'm sure, coming out over the next few months. And that's something that we'll have to watch for. Our markets are quite good right now. Very happy for us to come out and have a look at your property. Let us know. We can guide you and give you good advice on when and which property to sell if you do have multiple properties. I'm here to answer all your questions. Feel free to email me. We'd love it if you subscribe to our YouTube page and liked us on Facebook. And that sums up my October 2021 market update. Stay safe, everyone. Get out there when it's not raining. Enjoy Vancouver, one of the best cities in the world. And thank you very much for joining me today.